I've personally been banking offshore for over 20 years in top jurisdictions across Asia, Europe, the Caribbean, the Middle East, and the Americas. And as a team, we've helped thousands of people open bank accounts both for themselves and for their businesses. But the process of opening abroad, it can be tedious, and banking is opaque, it's hard to decode. So in this video, I'm gonna give you the cheat codes, 10 of my biggest takeaways from helping open thousands of accounts all over the world. But if you only listen to 3 of these takeaways, please make sure you listen to number 3, number 6, and number 9, because there's a good chance that these takeaways will completely change the way that you look at international banking. Okay, now let's get started with takeaway number 1, which is that money matters a lot. Now, this isn't surprising. We are talking about banking. But what I'm really saying is that the more money you have, the easier it is for you to open bank accounts wherever you want. Of course, how much money you need will depend on where you want to open your accounts, your client profile, the countries involved, meaning where you plan to send money and receive money from, as well as any risk factors that are tied to your profile. But all of these variables, they become much less important, or maybe better said, banks are willing to take on more risk when your deposit is considerably higher than the average customer, because banks can make more money off of you. Now, on the other end of the spectrum is takeaway number 2, which is minimum deposit requirements. They are a suggestion, not a requirement. Yes, like I just said in number 1, coming in with an above average deposit at any bank can result in bankers rolling out the red carpet. But you don't need to come in above the average deposit. And in certain cases, you don't even need to meet the minimum deposit. Now, this obviously isn't going to work everywhere. There are certain banks that are very strict in terms of their minimum deposit requirements. But over the last 20 years that I've banked offshore, I have found that banks are willing to be a lot more flexible than you might think. But there is a big caveat here. And it's that banks, they need to see you as a long-term client with the potential to be profitable. So if you're trying to come in low, below the minimum, and you have no plans to increase your balance over time, or you don't have any plans on making use of bank products or services, then you probably won't find a bank that is willing to be flexible in terms of the opening deposit. Now, takeaway number 3, it's a bit racy, and it's that banks are xenophobic. They discriminate against people from different countries and cultures. And yes, this is real. And just to be clear, I'm not talking about racist practices like redlining or other forms of mortgage discrimination, though those are obviously horrible too. What I'm talking about here is discrimination towards foreigners and foreign non-residents. Now, obviously, you're not going to find a banker or a compliance officer anywhere in the world that is willing to openly admit to profiling foreign non-residents. But if you call up a bank in a developed country, say the United States, and you sound like an extra in a Borat movie, there's a very good chance that you are not going to be getting in. Bankers hear Eastern European, Russian, Nigerian, Middle Eastern, Chinese, or even other distinct accents, and they immediately see red flags and hit the reject button. But it's not just account opening. There are tons of examples of people having accounts closed based on citizenship after they've already met the compliance requirements of the bank. Now, the most publicized cases of this happening, they're obviously in big banking hubs with large foreigner populations. Think places like the US or the UK. But this discrimination, it happens everywhere. And that means it's super difficult for foreigners to open and keep open bank accounts. And a big reason for this is that banks and bankers, they would rather deal with easier client profiles, the kind that don't require extra compliance checks, enhanced due diligence, and constant communication around transaction activity. And that's why, in most cases, the bank or banker that you contact will form a snap judgment about you before you even go through the application process. And this judgment, it will dictate how helpful they'll be, how much they'll advocate for you, and it will influence your chances of opening an account. And this ties in nicely to takeaway number 4. Your flags matter. Yes, your flags. Now, if you're new to the world of internationalization and going offshore, what I'm talking about here are the different flags that you plant around the world. Simply put, the countries that make up your profile. And this usually refers to your country of citizenship, your country of tax residence, the countries where you spend leisure time, the countries where your companies are structured, of course, the countries where you bank, and other countries that round out your personal profile. And when it comes to banking, the flags that matter most, they include your citizenship or citizenships, your tax residency, where your income is generated, and where you send money, or where you have expenses. And that's because these flags or countries, they typically make up the foundation of your risk profile. And while it's not easy to change these countries overnight, at least not with a lot of money, or potentially restructuring certain aspects of your life, knowing which countries impact your profile in the eyes of the bank can help you make smarter and faster choices when it comes to approaching banks. Which brings us to takeaway number 5. Yes does not mean yes. Just because a banker tells you that you can qualify for an account, it doesn't mean you can actually open that account. Often, bankers tell you to complete an application not because they think you can actually open that account, but because the number of applications they receive each month is a performance metric that their managers look at. Plus, receiving an application is the first step in the vetting process, which means that's how bankers gather information to formally tell you no. This is a lot more common than you think, and we see it a lot with people who come to us looking for help. And what's annoying about this is that in 95% of cases, the banker already knew that the application was going to be denied just by looking at the client profile. But more on that soon. First, let's talk about takeaway number 6, which is that it's illegal for banks to tell you anything. Listen, if a bank rejects your application, freezes your account, closes your account, requests supporting documents related to transactions, or anything compliance related, they can't tell you why. They won't provide you with any details, and they're not going to respond to your emails demanding further information saying it's your right, it's your account, and they have to tell you what happened. Because in almost all cases, they legally can't say anything. You see, most countries, they have something that we call a tipping off law. Basically, there are provisions that are built into each country's anti-money laundering and counterterrorism financing laws that make it illegal for banks to tell their customers anything. And this is true in basically every country that follows modern compliance practices, including places like the US, the UK, the EU, Canada, Australia, Hong Kong, Singapore, Switzerland, etc., etc., etc. And the whole point of these tipping off laws is to make sure that bankers don't tip off a person who could be a subject of further investigation. So lawmakers have essentially made it illegal for bankers to say anything more than your account is closed, or we need more information about this transaction. And as a result, banks and bankers, they keep their mouths shut and won't give you any details about why your accounts are closed or why your application has been rejected. I'll probably do a deep dive into tipping off laws in a future video, so if that's something you're interested in learning more about, make sure you hit that subscribe button so you get notified when we publish. Now, I do want to switch gears here to takeaway number 7, which is that the country is more important than the bank. Yes, banks, they're important, but in almost all cases, the bank is the second level of consideration after the country. And that's because banks operate within the country. They have to comply with the country's laws and regulations. They participate in the country's information sharing agreements, and they're backed by the country's deposit insurance scheme. Not to mention, banks are subjected to lending rates, capitalization requirements, and of course, the available human resources in the country. So when it comes to deciding where to open international and offshore accounts, the country is the most important factor you first need to consider. And unfortunately, like I've said in past videos, around 70% of people and business owners who come to us for help looking to open accounts, they're looking to bank in the wrong country. And this ranges from more exotic mistakes like banking in Belize, which basically no one should do unless they actually live there, to wanting to open accounts in Switzerland when you only have $5,000 to $10,000 to deposit, which isn't enough to get your foot in the door as a foreign non-resident at good banks. The point is, choosing the country where you want to bank is important. And that means considering how stable is the economy, how stable is the currency, how fiscally responsible is the government, how responsible is the banking regulator, and how strong are the correspondent banking relationships that are serving the country? Does the country have any kind of deposit insurance scheme? Are there capital controls that make moving money in and out of the country challenging? And is there a strong culture of professionalism to make sure you're actually going to get high quality customer service? There's a ton of other things I could add to this list, because there are a lot of important country considerations that people continuously overlook. And just looking at this list, you can start to see why many countries are not suitable for banking. On the other hand, you can see why places like Singapore are so good for banking, because the country has such a solid foundation. And that's reflected in the banks that operate there. And takeaway number 8, it's all about banks. More specifically, you need to be careful where you bank. Choosing the wrong bank can lead to many unforeseen problems. So I want to share 5 of the most common issues that we see, including one that can keep your money frozen for months. First, in the most basic sense, if you're not very intentional about where you want to open accounts, you could end up with a bank that doesn't have the services you need. And this can range from things like not allowing online transfers, meaning your money is basically stuck in the account unless you show up in person, or a bank that doesn't offer the specific currencies, products, or investments that you're looking to have access to. Second, if you're not careful about the fee schedule that the bank charges, you could end up paying a lot more for your new international bank account than you expected. And that's because most international and offshore banks, they make money by charging fees. Now, these fees, they can range from opening and maintenance fees all the way to transfer fees and online banking fees. And of course, there's more outlandish fees like fees for accessing online banking or transaction history, and even fees for closing your account in the future. So you really need to be careful and make sure you read the small print when it comes to fees before you open an account. Third, if you choose a bank that's easy to open with, meaning they don't have strict requirements or they seem to be very relaxed when it comes to account opening, there's a good chance that other people have figured it out too, meaning your accounts could end up being held alongside unsavory characters who might actually attract unwanted compliance scrutiny and regulatory attention. Fourth, if the bank doesn't maintain a strong compliance program, it could lose correspondent banking relationships, and that means your money could get stuck in the account, and the process to obtain new correspondent accounts can take months to undergo, meaning your money is going to be frozen in the meantime. Now, the next major takeaway is that banks change their preferences. Unfortunately, we see this all the time. And what I'm talking about here is that banks' internal policies about which client profiles they want to serve change. Of course, a lot of the time, these internal decisions, they are influenced by lawmakers, regulators, correspondent banks, and even geopolitics, meaning that compliance teams, they don't actually have any other choice but to change their client preferences. And two recent examples that we've seen include changes made by Mercury Bank in the US, which was driven by compliance changes imposed by their partner banks. And of course, there's examples like onboarding restrictions of Russians and Ukrainians following Russia's invasion of Ukraine. But it's not just lawmakers and correspondent banks that influence which customers banks want to serve. The banks themselves, they make these changes all the time. And these internal decisions, they're often driven based on profitability of certain customer groups, which takes into consideration the compliance requirements, the fees generated from those client groups, average deposits being made, and how much of a headache these customers are to deal with. And this happens all the time. In fact, over the last 6 months, we've seen major changes in the United States, Singapore, Portugal, and a few other countries as well. Of course, change isn't always bad. In certain instances, banks open their doors to an even broader set of customers. Though of course, if you ever do anything wrong, you can say goodbye to your bank account, especially if you have a higher risk or compliance intensive profile. Which brings us to takeaway number 10. But before I share takeaway number 10 with you, I just want to let you know that I also have a bonus takeaway for you, and I wanted to save the bonus as a special thank you to everyone who watched until the end of this video. So stay tuned after takeaway number 10 for that bonus. All right, takeaway number 10 is that you're just an account number. In almost every country in the world, banks operate on a simple one-strike policy. In fact, you don't even need a strike. You don't need to do anything wrong. Just by being a headache, or more specifically a compliance headache, your account can be closed. So for all the relationship-based marketing that you hear banks promoting, the truth is that everyone is just an account number. And banks will very quickly close your account for a number of reasons. Now, these reasons, they can include sending money to high-risk countries, engaging in activities that are similar to high-risk profiles, regularly triggering suspicious activity reports, or the bank constantly having to request supporting documents for wires that you're sending abroad. Or maybe your source of income is tied to high-risk activities. Whatever the case, if the bank doesn't view you as a profitable client, easy to bank client, and a client that they actually want on their books, there's a good chance that they will close your account because they don't care about you. They care about making money, avoiding fines, and making sure that they don't get hit with unnecessary regulatory action or investigations. And that means playing it safe and shutting down accounts that don't fit the cookie cutter version of the type of clients they want to handle. And that brings us to bonus takeaway number 11. This is the most important takeaway in this video, and when I personally learned this, I stopped stressing about my banking relationships, both for myself and for the companies that I owned. So what is it? Well, takeaway number 11 is that you always have options. Whether you have an account frozen, an account closed, or you're just getting peppered with compliance questions and document requests multiple times per week, you always have other banking options available to you. It doesn't matter if you're a high-risk profile, low deposit, or a hard-to-bank citizenship or residency. There are options out there for you. But new banking relationships can be very hard to find. So I'm gonna make it even easier for you to get started. If you want to explore a few of the easiest international and offshore banking options available anywhere in the world, including both in-person and remote opening options, with deposits starting from just a few $100s, I've outlined 6 countries for you to consider in this video right here. This includes easy to open accounts in traditional offshore banking hubs, a few easy European banking options, along with 2 options in the Americas. And the final country in this video is